Guys, do you see the website CBOE? That's option chain, and I presume everyone has this simulator, right? And we're going to put Disney here. Okay, and we're going to look at October. So pay attention because here sometimes you click October 16th, but then you will see here September. So we need to have October, sorry, third week. It's actually 1, 2, 3. Yeah, so it would be 21st, I think, October 21st. All right. So that's our strike prices, which we have here. On the right hand side, we see puts. On the left hand side, we see calls. Okay. So what we do with puts? Now, when you buy and sell calls, I think everyone understands that. Now, regarding puts, imagine that you want to buy the share. But on the market, when somebody is looking at this chart right now, I think, oh my goodness, Disneyland can go even lower. And they're afraid. They're just afraid. And they want to get some kind of insurance that their investment is protected. And they know that Fed's coming up with a new announcement next week and they're afraid of it. There are some people who scared. And believe me, when the share goes down, and especially if they bought them at $120 level, they already lost $30 and they're afraid that they might lose 30. There is no logic at this particular moment. It's just fear. People are afraid of it. Okay. And that happens. And I presume some of you experienced it already if you had bought shares at a higher level and it's dropped down and you know that it's good company, but still you're fearful that it might go even lower. Okay, that happens. It's just a human's emotion. And in this particular case, you come kind of handy for them because you tell them, look, I want to buy the share. I'm not sure if I buy it or I'm not sure if not yet, but I consider it. And they say, look, uh, will you buy it from me if I want to sell it to you within next month? And you say, okay, fine. What price? And you start negotiating for the price. It could be $90, it could be $92. So whatever you have. And you say, okay, fine. I will buy it from you at $92.5 if you decide to sell it to me. So you don't have to sell it, but if you decide to sell it, I will buy it from $92.5. Why? Because you are happy to have the shares. You want to buy it in any way. You sell puts only when you are happy to buy the share. That's the key. Okay. So instead of paying $92.5, you selling this put. You're telling him or her, okay, I'm going to buy the shares from you for $92.5. Now, the next thing what you do, you just create, and that's what you can get. You always get lower. When you sell, you get less. But you can get $1.51 in this particular case. Now, if during next month the share price will go down, and looking at technical analysis, we can see that it might go down. Okay, and on the third Friday, so it would be 21st of October, the share price is below $92. Do you think this person, if on the market this share is, for example, $90 or $85, will that person sell you shares at $92.5? Yes, of course. Because like it making sense. If they have shares and they can sell them at a higher price, they will sell it. Even if they like shares, they will buy them again, but they will sell it to you. Okay, it's like 100%. So, but for you, the cost of those shares would be $92.5, which you will pay minus $1.51, which you received month in advance because this money you will get in advance. That's kind of the key. So for example, if I want to trade this, how do I do it? So in my track, it's similar situation. In any broker which you go, it's very similar situation. What you can do, you can go to trading window, or you can do it from option chain instantly. So the way it works like that. So I click one or what's here trade. I can click trade, and that's it. I'm moved to my trading window. So what can I see here? So Disneyland, October 16th, strike price 92.5, put. I'm selling to open, so I have to change it. Sell to open, quantity. For example, I do 10 contracts, so for 90,000. Okay, let's do smaller because account is smaller. So 5 contracts, and I set a limit. So again, you can see that current price 151, 154. You can bargain, and I always recommend you to bargain. Just put whatever price. So for example, I put $2. Okay, so in this case, I will get more. So if the share price moves down a bit, I will get $2. So I put in $2, and then the duration. It could be day to order, so if only for 1 day, or you can do good to cancel. And interesting enough, on different platforms, brokerage platforms, good until cancel means different. In some cases, it means only 30 days. In some cases, it means like nearly 6 months. In some cases, it means until you cancel. All right, so that's kind of. If I want an advance order, for example, whatever do after that, I will sell it as well. I will do kind of, but at this particular moment, I just want to sell put. I don't want to do anything else. Okay, and then just click preview the order. Check it one more time. It tells me that market opens later, so it's not going to be triggered instantly. Okay, and I can see that's what I can expect. Okay, so sell to open. When you sell, it's always red here. Limit price is 2. One contract is 100 shares, so I sell 5 contracts. So it would be, if I have to buy, right? So I would have to buy 500 shares. So make sure that you have this money. So 500 shares multiplied by $92, it would be what, $46. Okay, $46,000. And then I just place the order. Okay, I always go in view positions, not position order status. So and that's what I can see. New skin, I have order to sell new skin call, and also I have Walt Disney to sell a put. Okay, so 2 orders here, and both of them are still open, not triggered. Okay, so similar stuff happens when you insert order with MyTrack platform. A bit different on interactive brokers, but I mean, it just layout is different, but everything else is very, very straightforward, similar. Okay, now guys, did I manage to explain you that how to do puts and what's the meaning? I think when you practice it on simulator, it will come up. Like, I mean, you will learn, you will understand what is happening. Okay, now it's about Disney. We look at Disney. Every time when you invest, you need to compare it with their competitors all the time. And if some name mentioned, for example, you read the value line report and you see, all right, there is some information about Netflix. What is Netflix? Okay, so what do they do? And if you go to value line report, you always can see competitors in the same industry. Okay, or maybe you already know them. So always try to analyze this type of companies. Okay, and today I'm going to look at 3 companies. Okay,